Welcome to MacroHive Conversations with Bilal Hafiz. MacroHive helps educate investors and provide investment insights for all markets from crypto to equities to bonds. For our latest views, visit macrohive.com. So greetings and welcome, Jason. It's fantastic to have you on the podcast show.
Excited to be here with you.
Great. Now, before we go into the meat of our conversation, I do always like to ask my guests something about their origin stories. So can you tell me what you studied as an undergrad? And then also, was it inevitable you'd end up in economics and the policy world and academia as well?
So I loved math and physics and thinking in a really logical and precise way. But I also was interested in our social, political, economic world. I had volunteered on a political campaign when I was in high school and cared about that side of it too. And so for me, economics was a great way to use math, to use logic, to use rigor, to think about something that I think is more interesting and maybe more important than quarks and leptons. And so those two interests really combined in terms of economics. Originally, I thought I'd be a pure academic, that I'd go straight from college to grad school, straight from graduate school to being a professor, and ended up being recruited in the middle of grad school to go work at the Council of Economic Advisors for a year for Joe Stiglitz. He reached out to me and I liked it so much. I ended up staying in Washington for 4 years. And in those 4 years, a different orientation, one that was somewhat less academic and more policy oriented, but still hopefully grounded in math and logic was born.
It's fantastic. And I know you worked in the Obama administration, so you had kind of front row seat on how politics works and how you implement economics and politics. And I recall Paul Krugman once he kind of left academia and started to write more about economics in the real world, so to speak. He talked about how he underappreciated the political aspect of economics. So on your side, when you were working in the administration, I mean, what are some of the things you found that people as academics or us on the outside don't quite appreciate when it comes to economic policy making?
Yeah, look, I think economic policy in some ways is more difficult than economics because, first of all, and more difficult than politics. Take climate change. If you ask an economist how to deal with climate change, they'll tell you, carbon tax. If you are a pollster and you poll people, they might say, let's do recycling. Recycling is the best way to deal with climate change. Either one of those is a really well worked out, clear answer. One of them, by the way, won't do anything for climate change, but it might get you elected. What you want to do, though, is combine the two. What can I do that can actually get done, that is not just get done, but is sustainable and can last? Not just what's popular, but some combination, not wildly unpopular, et cetera. So there's a little bit of art and science in the policy making. The other thing is economists, increasingly academic economists, publish papers that are often relatively narrow. And they're a little bit looking under the lamppost for their keys. They have a powerful technique. They know how to do causal inference, and that's what they study. A policymaker can't say, oh, I don't know the answer to this. There's not a well-identified precise answer. You have to do the best you can. The Fed is raising and lowering interest rates without understanding tons of stuff about how the model functions and what the parameters are, et cetera. But it doesn't really have any choice. So just the enormous amount of uncertainty in policymaking as compared to where you can just pick the thing you study, which is what economists do.
That's great. That's very helpful. And now, of course, in recent years, the big story has been COVID and the after effects of COVID. And we've had this surge in inflation. It's starting to come down. And everyone, has their theories of what caused the inflation, what's causing the decline, was it temporary or not? I mean, how would you characterize the last few years from just a regime perspective and with particular, focus on inflation, say?
Yeah, so in the United States in particular, we saw an enormous increase in nominal GDP. So the total amount of money that people, businesses, government, et cetera, were spending. I think it's really hard to explain that with just supply stories. Yes, there was the Russian invasion of Ukraine. Yes, there were issues with microchips. Not all of the issues that people called supply were really supply. Our ports were backed up mostly because imports went up a lot, demand went up, not because of a supply issue. But regardless, all those supply issues, they affect relative prices. The prices of some things go up, and then people can't afford to buy other stuff, so their prices go down. The only way you could have such a sustained increase in the total dollar amount of spending is if people had more money. And they got a lot more money through the fiscal system. They effectively got more money because of what the Fed did by lowering rates. And so, and fundamentally, demand was at the heart of the inflation that we saw. Now, there was certainly some inflation added on top of it by all of those supply shocks. And if we hadn't injected that much demand, it might have been that we dipped into another recession when you had the Russian supply shock from the invasion of Ukraine. So I can't tell you whether this is good or bad. We got more real output and we got higher prices. I tend to think the ratio of the last dollar went much more into prices than it did into output. But but we got more of both. We had just an extraordinary amount of demand as we came out of this. And yes, supply was imperfect, but I don't think that was the root cause of the inflation.
And I mean, and do you think we're in a new inflation regime compared to the pre-COVID, in the post-GFC, pre-COVID sort of years, 09 to say 2019, inflation was very low. Everybody was talking about how do we sort of raise it, price level targeting, all of these sorts of theories started to come out. I mean, do you think we've broken out of that regime now and we're just back to kind of a more normal regime of say 2% average, or are we in an environment where inflation regime is still uncertain and we could end up in a 3-4% inflation regime if we're not careful?
Yeah, so I think that's up to the Fed. And I don't think there's anything structural to inflation. People talk about globalization, productivity, immigration, whatever. All of that affects the real side of the economy. It affects our potential growth. It affects relative prices. I don't think any of that affects inflation. You have countries in periods of high and low inflation with every different combination of globalization and productivity you can imagine. So inflation really is a monetary phenomenon. Right now, I worry that there's a lot of persistence in the inflation that we're experiencing, that more rapid wage growth leads to more rapid price growth, more rapid price growth leads to more rapid wage growth, and that's embedded. I don't know that stays forever. That might shrink its way towards 2. I don't think I would foresee a period of below 2% inflation on a sustained basis in the next couple of years. And the Fed probably won't mind if inflation ends up settling down at something like 2.5 rather than making it all the way back to 2.0. But if it was 3 or 4, I agree with you. I think that would be a big problem. And that's a risk. I don't think it's a huge risk. And I don't think it's a huge risk because I don't think the Fed would allow it to happen.
Okay. And, with the Fed specifically, there was some criticism of the Fed that they didn't hike rates, soon enough at the beginning. But they have now raised rates quite significantly in terms of, at least in nominal terms, the change has been quite dramatic. Like 2 questions there. One is, do you think that that the current expectations that they've hiked enough is sufficient, and so now the next move should be a cut, that we're in that environment? And then the second question is, why haven't we had this recession? The yield curve inverted. People thought, okay, rates being jacked up, so surely the economy should roll over.
Yeah. So first of all, a lot of credit to the Fed. They got behind the curve in the late 2021, beginning of 2022. But boy, did they catch up really fast, much faster than I thought they would be able to move. And they made it work. They even cleaned up some of the financial accidents that happened along the way at places like Silicon Valley while continuing to keep their eyes laser focused on macro. Why didn't we get a recession from all of this? I think largely that's the story of fiscal policy. You did see negative growth in a lot of the other major economies of the world as they tightened their interest rates. In the United States, you did see interest rates really taking a bite out of things like residential investment. But what we had in the United States and they didn't have elsewhere in the world was a second round of fiscal expansion around chips, infrastructure, Inflation Reduction Act, and the likes. You saw another big round of deficit increase last year. You see that in different parts of the economy, like manufacturing structures, also some support for consumer spending. In terms of where we are now, we're in a place where I think the Fed's next move will be a cut, but I expect them to really wait for a lot of reinsurance on the inflation side before they cut. We've had 4 bad months in a row. I think they'd want to have at least, say, 5 good months in a row before they felt reassured enough about inflation to cut rates. That puts a cut back at the December meeting. It could come sooner if the job situation deteriorates. I'm not predicting that's going to happen. I don't see a reason for that to happen. But, the unemployment rate goes up to 4.1, 4.2. I think they cut at the next meeting. Conversely, if the unemployment rate went down and inflation was trending above 3%, then I think another hike is on the table. But I don't think they'd be in a hurry to do that. I think they'd need a lot of data that the economy needed a hike before they do that.
Yeah. And you mentioned some of those fiscal packages. So let's take, say, the Inflation Reduction Act, which was, I suppose, one of the big ones. As a kind of economist and also as a policy person, I mean, how would you score that that package?
So, in terms of achieving its main objective, which despite the name is reducing carbon emissions, quite good. We're getting a lot of investment in the green space, a lot of movement in that space. This law is making a big difference there. As macro policy, the law ended up being more front-loaded in terms of the demand increases. So it's definitely added some to real growth, but it's also added some to inflation and added some to upward pressure on interest rates, caused some crowd out. So we're getting more investment in the green space, but that is crowding out investment elsewhere. Overall, my objective for the world isn't just GDP, it's carbon emissions, climate change, and the like. And so, in terms of maximizing across that broad objective function, in many respects, I think it's really, really quite good.
And then the other ones, the infrastructure bill and then the CHIPS Act, how would you score those ones?
Yeah, so when the CHIPS Act passed, I wasn't sure because it's not self-executing. It gives a lot of power to the Commerce Department to make grants. And who are they going to make grants to? What objectives are they going to set? How is that going to work? It seems to be working phenomenally, much better than my expectations in terms of the amount of microchip build here in the United States. Now, there's a question: what's the price of these chips going to be? Who's going to want to buy them? If you're a little bit behind the very best things, where does that mean you stand? So I think there's still a lot of questions there. But, for a couple tens of billions of dollars on one of the biggest issues facing our economy, it's a pretty good set of seed money. Infrastructure is something that has a decent rate of return. It's not sort of transformative and exciting like chips or climate, but it's something we need. So I'm mostly fine with that too. But again, I sort of differentiate between all of these. They're really long run policies. In the case of chips and IRA, they're an objective that I think is less about the economy and more about other goals. In terms of the short run macro, I think they've done more to complicate the Fed's job and the soft landing than to ease it. But, not so terribly so that I think that should be an overriding consideration.
And earlier you talked about some of these big sort of secular forces. You said don't affect inflation, rather it affects productivity and such. Deglobalization or globalization, demographics, and so on. Now, if you throw into the mix these policies as well, what's your sense on U.S. trend growth and U.S. productivity? Are we in a good place now? Have we passed secular stagnation? Is this are we going to be able to talk about a higher productivity economy for the next, say, 5-10 years?
I hope so. It's not something I see in the macro data. So let me talk about that first. But it is something you read about in the newspapers and you talk to people in the AI community and businesses more broadly about. So first of all, the macro data, yes, we had good productivity growth for the last couple quarters, but we had abysmal productivity growth in the year 2022. And you look at the whole post-COVID period, and we're tracking a little bit below what the Congressional Budget Office had forecast prior to COVID. So overall, the productivity growth we've seen in the last year, I think, is much more of a bounce back from the unusual slump before that, not some burst of innovation or the like. Moreover, I would not expect generative AI to be showing up in the data now. I talked to somebody at a big bank, and they've hired a lot of people to figure out how to use generative AI. They are not currently using it. They're not using it to write mortgages. They're not having it negotiate things. They're not having it do deals. So far, generative AI is reducing their productivity because they have these people working on how to make it work, but they're not selling anything or making any products based on it. So if it's possible that right now the generative AI boom is doing a lot for demand, but it could even be not increasing, it could even be reducing supply, output per hour being a little bit less. Now, that bank, all the other businesses going through the same thing. I don't think they're stupid. They're really smart. They're just trying to do something that's going to pay off 2 years from now, 5 years from now, 10 years from now. So that's where I see the dividends from all of this coming. Now, the tricky question that I don't know how to answer is that over the last 50 years, U.S. labor productivity growth has been 1.7% per year. Let's say AI adds half a point. Then what is productivity growth over the next 20 or 30 years? I don't know, because I don't know what the baseline is going forward. It's not like you start automatically at 1.7 and you invent a new thing and it adds to your 1.7. Part of how we got to that 1.7 was a constant stream of new innovations, new general purpose technology, computer, internet, etc. And so it may be that generative AI is responsible for half a percentage point of productivity growth. And that's how we get ourselves back to 1.7, which otherwise we would have fallen below. So you asked if it solves secular stagnation or slow productivity growth might be the way I'd prefer it, just so we all are on the same page in terms of what it means. And the answer is not obviously yes. It might be that it's what gets us back to normal productivity growth.
Yeah, no, I understand. I hear you there. I mean, I've been working on lots of AI sort of models and tools as well. And what I'm finding is beyond the initial sort of burst of excitement, it requires a lot of work to get it to do the right thing for you. And it'll probably be next year before we see the fruits of all of that work. So I definitely see where you're coming from in terms of the conversations you've had on with banks on AI. The kind of a related point around productivity is this central bank debate around R star. There's some central bankers like to talk about R star, others say no, it's just a conceptual thing. But obviously from a policy perspective, you need to have some sense of what the kind of equilibrium interest rate is to know whether policy is tight or not. Those sorts of debates around R star, policy is too tight relative to something, do you find that's too academic, or do you think it is worth having those discussions or not?
Too academic, like that's an insult.
Okay.
Look, I think we should be doing our best to figure out what R star is, but I don't think it's super useful for setting monetary policy in the short run. It's not like, oh, we're going to decide what R star is, then we're going to decide how many percentage points above or below R star we want to be, and that's where we put interest rates. The Fed should be looking at inflation, unemployment, variables like that in setting interest rates. Where R star matters is less for how monetary policy is set over the next year or two, and more for any business or fiscal authority who's planning over a longer horizon. They need to have some sense as to whether interest rates are going to come back down to, say, 2.5% short rates, or they're going to stay where they are now, or where they'll end up in between those two. To me, two statements seem safe. One is interest rates are temporarily higher than normal because we're still fighting inflation, so they're going to come down from here. But the second statement is I would not expect them to come all the way back to where they started prior to COVID because we have a lot more debt than we had prior to COVID. We also have a lot more investment demand related to the AI we were talking about and the climate issues that we were talking about. So I would expect interest rates to come down to something higher than that. It makes me a little bit nervous that the FOMC's median dot for long run interest rates has barely budged from 2.5 to at the very last meeting. They raised it all the way to 2.6. If I were there, I'd be putting down a number probably like 3.5 for my long range Fed funds rate. And, if you said 3.75, I'd probably argue with you less than if you tried to say 3.25.
Yeah, no, I agree with you.
And this is all nominal, by the way. Our
Yeah.
is real. So subtract 2.3 from everything I said, and you have the real version.
And you mentioned debt, and debt levels are very high, and the public discourse around this tends to be quite alarmist. That the US has this big debt problem. There'd be a debt crisis somewhere down the line, soon. Healthcare costs are spiraling. Aging population. I mean, you name it, you can kind of hang lots of things around sort of debt levels. How do you approach a subject like that in terms of sustainability and what fear level we should have around that?
I approach it with just constantly obsessing over the numbers and worried that I'm not really sure what any of it means. And to some degree, shifting my mind based either on the numbers or my mood. Look, some things are very clear. Absent a policy change, the US debt is extremely likely to continue to rise as a share of GDP. That definitely cannot happen forever. So that we know. What we don't know is at what level the debt needs to stabilize at. So, let's say it could go up to 150% of GDP, which is around where Japan is now. The UK spent an awful lot of the last couple hundred years at 150% of GDP or higher. Let's say it could go to there. That might mean we have 25 years before we need to act. Maybe Argentina had a fiscal crisis at 45% of GDP debt. Maybe we need to get all the way back down to there. Well, if that's the case, we're sort of toast because I don't really see any plan to get us there in any reasonable amount of time. So I don't quite know where you need to stabilize, or I don't quite know when you need to stabilize. I'd also rather not find out the answer to that in a really ugly and unpleasant way. So that uncertainty is an argument in my mind for taking out some insurance, doing a bit extra on all of this, up front. And, it might be that if we could let the tax cuts expire next year, and that's a huge if for the political system, but if Congress could manage to do nothing, which is something that it's been able to do at some times in the past, then maybe the rest of the problem is probably about 2% of GDP, which is, difficult. It's difficult at a time when defense spending is increasing, but it's not at all insurmountable. Lots of countries have done that. Even the United States has done that in the past.
Okay. And then on the health side, that's obviously a big expenditure, big challenge socially as well in the US. We had obviously ACA. There's been also everyone's constantly coming up with ideas for reform. Medicare Plus, Medicaid, and so on. Some kind of greater state involvement. Is presumably there's no easy solution here, which is why that hasn't been sort of done. But how do you think about this from a medium-term perspective? Because it does seem like this is going to be a large part of the cost for the government and the state.
Yeah. So health growth has slowed a decent amount in the last 15 years. It's cost of the main government programs, Medicare and Medicaid, has been more than $1 trillion less than what had been expected back then. We don't fully understand it. The Affordable Care Act helped some. I think more the brute formulas that set health growth on a reimbursement rate increases at a slower increment each year are the main thing. A lot of our smart pool delivery system reforms have, I think, been fine, but a bit disappointing in terms of the quantity of savings. To your point, no easy solution. Every time there was some great idea, disease management, you get a nurse to call somebody once a week to take their diabetes medicine, and by doing that, you avoid the much more costly hospitalization if they don't take the medicine. Well, you did experiment after experiment with things like that. It turned out you end up paying more for the nurse to call the person than you saved in terms of hospital bills. And the whole thing might have been good for their health, might have been worth doing, but wasn't actually a saver and might even have been a coster. So that happens over and over again in the health system. I don't, part of it also is just, we pay doctors more than a lot of other countries do. And we do that in part because we also pay lawyers and investment bankers and consultants more than other countries do. And people have a choice between those different professions with more inequality in the United States. That's going to result in higher health costs. So I think there's some things we can do. I'm a fan of higher deductibles, especially for middle class families and wealthier families. I think it is a bit crude, but it does lead people to use less health care and do it in a way that doesn't necessarily harm their health that much. But there aren't a lot of great, eliminate fraud, waste, and abuse, leave everyone better off, and spend less money options out there.
And actually, you mentioned eliminate waste. Every sort of government seems to have that in their manifestos, that a large amount of spending they'll do, or funding of tax cuts, they'll do it by eliminating waste in the government. We're finding in the UK, we have an election coming up over here, and all the major parties are saying, they'll be able to fund lots of programs by cutting waste. Given that, you've actually have policy experience, is it possible to cut waste or not? Or from the outside, it seems like there's this massive bureaucracy, and if you just sort of hack everything away, then you'll be able to have the same output. But it'd be good to hear from you what you think about that.
Yeah, so I'm mostly skeptical about it, but let's define waste in two different ways. Let's talk about America's military. One is, could we get the same amount of defensive capability for less money? I think the answer to that is yes. Could we get the same defensive equipment for less money? I think the answer to that is no. So let me explain. There was, I don't remember the exact details, but it was some sort of like aircraft carrier for helicopters made in Mississippi. I could be getting this all wrong, but that's my recollection. And it pretty clearly was doing very little for our national defense. We don't really need aircraft carriers for helicopters. And so it wasn't making us much safer as a country, but it was like helping the senators in whatever state it came from. Mississippi, might have been Louisiana, anyway, somewhere in that part of the country. So we could have cut spending on that, deployed that spending to some other better type of naval vessel, and made the United States safer, or the same degree of safety for less money. So I think we can, in that sense, be more efficient. But once you decide you need a helicopter carrier, I don't think we could have gotten that helicopter carrier for much less. So there's room for restructuring government to get, similar outcomes at a lower price, but they're not just like your classic fraud, waste, and abuse. You're paying too much for a hammer and too much for a nail. No, it's that you're making these wrong big choices, and you made that big choice for a reason, and it may not have been a good reason, but it was for a reason.
Okay, no, understood. That's clear. And speaking of defense, there's a lot more concern about geopolitics at the moment. So we have this ongoing kind of conflict between US and China at different levels. On the trade side, there's a military, conflict, I suppose as well, technological one, Russia, Ukraine, Middle East escalating as well. I mean, how do you think about sort of the geopolitics and what it means?
China is unlike any of the major things we've faced here in this country for 100 years. It may have some parallels to what, you know, with like on the continent in Europe, 115 years ago prior to World War One, in that we're incredibly linked economically. We're really, really important to each other economically. Americans would be much poorer were it not for the extensive economic ties we have with China. But they really are an adversary. And they're a country that has a very different view about how the world should function and an evolving view about how they themselves should function in the world. What do those two fundamental truths say? Decoupling, de-risking, call it whatever you want. You can maybe do some of it around the edges, around things like microchips where we're doing it, but there's a limit to how much of it you can do. I liked the administration's slogan of small yard, high fence, which basically said we're going to have a small set of things that we protect, very critical to national security. When we protect them, we're going to protect them really well with the high fence. I think that's much better than like across the board tariffs on consumer goods. At the same time, I think, we need to be realistic and honest. And, if China controls 95% of the global market and some critical input for something, we might want to be thinking about how we diversify. Now, there's certain things we can rule out. I'm not worried about the trade balance with China, for example, and I'm not worried about the consumer goods we get from China. I'm not even that worried about the EVs we get from China, although I'm willing to let someone to try to talk me into that. So the fact that we have so many issues with China does mean we need to be really smart about prioritizing the real and important ones and not getting ourselves distracted and running down rabbit holes on the ones that actually aren't that important or may even be not a problem at all, but something good.
Okay, no, that makes sense. And of course, we haven't talked about the U.S. elections yet. Obviously, there's elections coming up this year. Biden could have a second administration. We have Trump, who, there's an unknown quantity in terms of what he could do if he had another term. How are you thinking about the potential outcomes of the election?
Well, first of all, I'm mostly like jealous of the UK that the election there lasts like 12 minutes. And then it's like over and there's a new government the next day. Ours just goes on and on and on and on and on here in the United States. But I don't know. Look, I mean, you can't have a forecast for any American election that's super different from 50-50. We've been very closely divided and had very close elections since, at least 1992. Almost every election, there's been a third party or some very last minute development that has changed the outcome in some sort of unpredictable way. And, this one I think is a quite big one. That's true to some degree economically, where President Biden, I think, has been terrific in his respect and support for the Fed, something that Donald Trump did terribly in his first term as president, and I'm worried it would be even worse in his second. President Biden has done more in terms of tariffs than I'd like to see. But Donald Trump has taken, the Biden proposals and raised them almost 100-fold in terms of the amount of trade that they would cover. So I think there's some important economic issues. The non-economic issues, to my mind, are even more important.
Okay, yeah, no, I hear you on that. Now, I did want to ask you about the environment at universities at the moment. So we've, there's been. Obviously, recently there's been the Palestine camps. In general, there's been this issue around, woke, universities, especially the Ivy League. There's a lot of focus on Ivy League institutions, it seems, especially from the right, attacking institutions as being kind of out of touch. And, you being, at Harvard and, from your earlier sort of times, I mean, do you think academia has changed a lot, over the years? I mean, is there something fundamental that's shifted and something that is we need to worry about?
Right. I mean, as someone that loves our university system, loves my particular university, I have a lot of things I'd like to see change. But let me just start with boy, is it one of the amazing strengths of the United States, our university system. It's so critical to our economy. Most of where the money goes and most of what faculty and students do is in areas like STEM or economics that aren't, your sort of classic so-called woke, as you said. And so, and our students are amazing. I was on the two different committees for prizes for senior theses for undergrads, and they are writing incredibly creative, professional level, could have been written by a, professor at another university, type of theses. It's just so amazing and so exciting, what these students are thinking about, understanding and improving about our world. And we got things like a COVID vaccine in record time, because of our universities, including the one I teach at. Um, do I think we have problems? Absolutely. Probably the one that concerns me most is viewpoint diversity, and especially in the social sciences. Almost everyone, votes for the left party, not for the right party, and that even if you try to be scientific in your mentality, it's just a little bit harder when people are seeing things politically, in the same way. So I'd love more genuine dialogue, debate, especially more conservative, perspectives that are represented in economics, in especially other areas of social science. Um, Speech and the like is an issue we're grappling with. But look, Harvard also recently took two big steps. One, they eliminated statements. The university won't be making statements about global events and something happening somewhere in some part of the world. And the second thing is they got rid of mandatory diversity statements for faculty hiring. Diversity is really important, but diversity statements were like a Maoist type exercise, and not a way to genuinely pursue that goal.
Yeah. No, that makes that all makes sense. Now, I did want to round off with a couple of personal questions, again on universities. Now, some of our listeners are younger and they're going to sort of finish university this year and enter the real world. What advice would you give them as they enter the real world?
I don't know that I've ever been great at the advice thing, but be open to different changes, different directions. My life and career has been, in one sense within a certain frame, but going from academia, going from policy, these are actually decently different, and developments that I didn't expect or anticipate or plan for. There's a real option value to learning more, which is to say, experimenting, trying things out, and discovering something that might have been a different path for you. And the last thing I'd say is people that are almost all interesting work involves working with other people. There's, maybe certain areas of pure math that aren't that way, but almost everything else is working with other people. So your ability to get along with others, share credit, collaborate. I've seen very few people successful without those skills, and I've seen a lot of people whose careers reached a sort of earlier ceiling than they needed to, because they weren't quite as nice to others as they should have been.
Okay, no, that makes sense. And then on books, I mean, I love reading books. I love getting book recommendations. What are some of the books that really influence you over your career, or perhaps even books recent that you've read that you'd like to recommend?
So, when I was younger, I read a lot of books. One that's just leaping out of my mind is like Mansur Olson's Logic of Collective Action. And that type of both the specifics of the book, how he thinks about incentives, different ways of overcoming it, applies it in a wide range of domains, whether it's the economy or politics or labor unions or whatever else, was just sort of opened my eyes to social science. And I think it's a book that's aged well. And I'll fast forward all the way to the present. Probably the most exciting book I've read in the last 5 years was a book called The Weirdest People in the World by someone named Joe Heinrich, who synthesizes evolutionary biology with some economics, some culture, some psychology, to tell just an amazing story about the role that culture has played in economic development and the growth of the modern world, and how that story was often missed by thinking that the university students you were doing your lab experiments on for psychology were actually representative of the world as a whole. No, they're actually not. They are what he calls weird, Western, educated, industrialized, rich democracies, and there's something different about them and worth understanding.
Yeah, that's great. So that's been excellent. And so, what's the best way for people to follow your thinking and your work?
So, I'm on Twitter more than I should be, so that's one place. If you're interested in books, I review them on Goodreads, and then I write in the Wall Street Journal and elsewhere. So just look around.
Great, and appreciate that, Jason. Thanks a lot. That was an excellent conversation. I learned a lot, and good luck with all of your various endeavors.
Thanks so much.
Thanks for listening to the episode. Please subscribe to the podcast show on Apple, Spotify, or wherever you listen to podcasts. Leave a 5-star rating, a nice comment, and let other people know about the show. We'd be super grateful. Finally, sign up for our free newsletter at macrohive.com/free. That's macrohive.com/free. We'll be back soon, so tune in then.